Welcome, traders. My name is Adam Harris, and this is recording for Monday, the 7th of April. What a week! You know that saying, Chinese fortune cookie saying, "May you live in interesting times." You are living in interesting times. Okay, this last week, absolutely crazy. Let's have a look at what's coming up this week in the news. So first of all, I would pay attention to a lot of the US dollar news. Okay, where you need to see that. We want to see what's happening with GDP for the UK as well. But things such as CPI, FOMC, all these things are going to give us some insights into kind of what the temperament is of the sort of the US, kind of what's happening there at the moment. There's a lot of, excuse me, I would expect a lot of increased volatility this week, guys. Might be one of those times to just sit on your hands and do nothing. But that being said, let's go to the charts. So here we are, we're looking at the VIX. Now, you know how I'm always saying how this is just kind of, ticking along the bottom, and the monthly gives us some perspective. Last week, I spoke about how we might get a bit of a move higher. Boy, did we. Okay, so this is it. We've just smashed right through. There was no kind of slow walking this thing. We've smashed right through into kind of obviously increased volatility across the markets. This is COVID over here. You can see this. I can't remember what triggered this. If anything, it may just have been related to, I don't know, the elections. There wasn't anything specific that did it, market, but this is certainly looking extremely and highly volatile, close to COVID. Let's go back to 2008. So this is 2008 over here, the global financial crisis. And so we're seeing similar types of behavior. COVID, this is big. Okay, this is bigger than normal. Not saying this is a surprise, that it's just that we don't want to always be anxious about things in the future. We need to be able to see them potentially happening and then respond appropriately. So certainly we're going to see an increased amount of volatility in the markets, but just wanted to draw your attention to this. Yes, we are there now. Okay, so look at the dollar index. So first of all, yes, we did weaken, which makes sense in terms of seeing a devaluing, I guess, of the brand of America. It's going to weaken ultimately, the faith in the US dollar, possibly in dollar holdings, a series of other things. But having said that, and of course this week, I think, or in the medium term, I do still expect that dollar to continue to weaken. But technically, we've come down, we've bounced off a level of support within this range. And actually here we've got some bullish divergence and a very strong bullish recovery on Friday. So for me, shorter term, my expectation is to see if we break the high of this, we could see potentially a retest of that resistance up here. And then we'll have to see. We'll take it from there. But shorter term, look as though there might be some dollar strength back on the table. That being said, euro dollar as well. A little bit of bearish divergence here as well. A little bit of a failure at that. We could still see it pull back a bit and then continue up. We'll see how the week closes, but it's now sitting towards the top of this range. And so very likely, technically, we just saw set off the top of that range. Looking here at cables, so cables come back down, broken these lows. So this trend is now broken. We've got a very relatively strong rejection candle here. Again, we could see that dollar continue to weaken. It's possible. Look at this price action. I've seen this kind of thing before, but it leans more towards dollar strengthening, at least for the medium term. Then we've got dollar yen. So the dollar yen also showing some bullish divergence here, bouncing off this. A little bit of wick showing here. So again, this hinting at possible move to the upside. So again, hinting at dollar strength, at least initially, the early part of this week. We'll see how that plays out. Dollar Swissy, on the other hand, although there is a very strong rebound here, overall, it is looking as though it's very much going to continue down. Ultimately, medium term, if anything, down towards these levels of support. There's no real bullish divergence here. It's not really. It's such a big move. I'd be surprised for it to get back up there. So we'll see how this goes. Dollar CAD just ping-ponging all over the place, so it did actually manage to break down. We saw this sort of bearish pattern breaking down and then immediately rebounded off that, so you could see that happening over here. So, interesting. We're seeing that possibility for that dollar strength to come back on the table. We'll see. All right, gold. So gold producing this very bearish weekly candle, couldn't close above that 30, let's call it 3075, but certainly 3088. And so I expect this to potentially head back a little bit further, especially if we break the low here, then I would expect to see us head down towards that 2900, 2950, 2900 level here at this coming week. Quite a heavy sell-off on gold there. Crude oil actually breaking through. So this is significant. Breaking through this level of support we've had for a while, coming down to test the next level of support. So if we see continued sell-offs, we've got some bullish divergence here as well. But again, having broken through other than a bounce, it is interesting. It is pushing us closer and closer and closer to seeing a potential bigger sell-off on crude oils in the coming months. Not even that far away in the coming months, yes. All right, let's have a look at the global indices. Okay, so heavy sell-offs. Just to clarify, we are absolutely, definitely no longer in a bull market. All right, we're definitely now in bear market territory. We've got a confirmed downtrend on the weekly. We're below that 50-period moving average. We are absolutely, that bull market is dead, done and dusted. We're now in a bear market. That being said, again, regulation-wise, I'm not your financial advisor. I can't. I'm not giving you advice at all. From my perspective, what I'm looking for now is to see how the market responds at these 50-period moving averages. To me, this is now more a month-by-month game at this point in time. We're still in sell-off mode. I'd be incredibly surprised if we manage a recovery like this month. So I think if anything, we're going to be looking towards May, June, July for possible recovery. What I really want to talk about, though, is you can see how close we've come in the past to bouncing off this 50 period. This is COVID, bouncing off that. This is the bear market in 2022, bouncing off that. And this is where we are now. So really, for me, a bigger sell-off than COVID. This is a market shock. We're in a market shock, of course, similar to that. I want to see what happens with that. So this is going to be the frame of reference here. So what I mean by that is if we see a much bigger sell-off here, it'll give you an idea of the extent of the damage that the Trump administration is doing to the global markets. So, which doesn't really make sense because they were the envy of the world 2 months ago, and now the pariah of the world, which is just absolutely bizarre. All right, so the S&P as well. Again, I'm looking to see how it responds off this 50-period moving average, off these previous highs. I do expect, if we do break the low here, to see a further sell-off. We might get a bit of a bounce this week, but I don't think the panic. This is just Thursday and Friday. This is just, the tail end of last week doing this heavy sell-off. And again, I think we can remove this now. This is not relevant. This is kind of if we were expecting a normal pullback. I'm hearing a lot of people talk about how 10% pullbacks or 10% corrections are standard. And yes, that may well be the case. But what makes this different is that not to say that tariffs haven't been imposed before and market shocks haven't happened before. But what makes this different is that the last time this was tried by the same Republican Party, by the same political party in the US, it triggered the global depression. So that although it has happened before, it didn't end very well. And so they still have opportunities here to turn things around. They could pause the tariffs. They could, they're going to attempt probably to cut rates and do a few other things to stimulate the market. We'll see. But I'm not anticipating anything just yet. So as I said last week, I take it level by level. I'm expecting to see potential futures, further sell-offs, but not extreme stuff at this time. Again, as I said, I'm just taking it down from level to level to level. And as I said, if we do see a recovery, it's potentially going to be something that doesn't necessarily happen this week, but something that happens in I would think reasonably is more likely to happen in May or June or July. NASDAQ, okay, again, coming down to that 50-period moving average. So having a look at it here, you can see how it's bounced off there in COVID. This is during the bear market, the recent bear market correction, and then, of course, this is where we are. So this is what I'll be monitoring this area to see. We are now at that level. We'll see if that's going to be the case. From a technical perspective, it's a very nice sell-off, but it's also very extreme, very quick. Okay, which is why we see that VIX starting to pump up. We could see the Russell 2000 back at the bottom of this range. So this has been in this range, obviously going back to 2022. If we drop through this, I would expect us to head down towards 1,500. Let's have a quick look at the FTSE. So although the non-US markets were coping very, very well, quite happy to see that. Obviously, how well they were coping, they've started to experience taking a bit of a hit here down towards these key levels. So again, if these levels of support fail, I'd expect to move down towards 7,500 or possibly a little bit further, but just level by level for now, guys. No panicking. Let's just see how the market copes this coming week. Again, the DAX also finally letting go and actually selling off quite a bit aggressively as well, but back down to the moving averages here. So this is going to be my very first spot here, looking to see if we do get some form of a recovery in this area. Not saying we have to. I'm saying that if we do, this is a good spot for it to actually take place. And again, we'll have to see how the coming months go. But then have a quick look at Bitcoin. So Bitcoin, to me, still it's struggling a little bit here, taking a lot of pressure from above. I would not be surprised to see this take a bit of a further sell-off this coming week. That 50 period is relatively important. If we break below that 50 period, then we start to look like much more further downside for Bitcoin. Okay, Ethereum pushing right down outside of this range, right down near the lows. So this is back down towards these previous lows over here as well. Apple. Heavy sell-off, fell right through this level of resistance, doesn't appear to have found some support. So again, for me, it makes more sense that we'll see this continue to head down towards the next low here, 166, and potentially test that 50-period moving average. We'll see if it could stay above this. The trend over here was relatively healthy, but this is not a normal market correction. This is almost like a forced market correction. It's a little bit bizarre. If you are thinking this is odd, it is odd. There is no real thinking behind it. It doesn't appear to be a very smart move, so we'll see how it ultimately plays out. We're going to have to see how that goes. Again, here I see selling into the close for Microsoft. I see this heading further down towards 341 at a minimum. Amazon as well, to me, looking to see this head back down towards these previous lows, and then we'll assess where that is. Let me just correct that. There we go. And we'll get rid of this stuff. And we'll take it from there. Okay, so at this point, it's really just about how the market, now it's just wait and see, watching from the sidelines. We got Google. Heavy sell-off, we've broken the lows again. I expect this to come down towards the 50 period this coming week. Meta as well. This is a good area to see if it can find some support. Otherwise, again, we break through this. I expect us to head down towards 428 or even 400 would be the next level down. Cautiously, very, very cautiously shorting the markets for day traders. But again, we're going to see bounces off key levels. We're going to see increased volatility. I don't think the unexpected spikes and swings and wild moves is done yet at all. So I'm just exercising extreme caution here. Not as actually probably safe not to assume anything, but technically we're looking at further sell-offs. Now, the one that is interesting to me here is actually Tesla. So I'm just going to show you this. This is the one I find quite interesting. This is forming it. It's not necessarily anything guaranteed, but just noting that we have a series of lower highs coming in here. So we have a series of lower highs coming in here, and again, coming through here, we've got a series of lower highs. Now, if this does form a wedge like this, and it does potentially continue through, this is where it gets interesting to me. I need to measure this as a distance thing. Give me a second. We could see a move. It's possible that we could, and I say just possible that we could see a move that goes from here to here. Sorry, let me just fix this. I want to just quickly take off the extension. Let's do that. We could then see a continued move. If this is the case, we could see, let me see if I can copy this and move it down. We could see a breakthrough. We could see a continuation down. And this is just a very hypothetical situation. We could see a move. This is building up to a breakout pattern. It could, of course, break out to the upside. But if it breaks down, often what happens is it'll do a move in and then it'll do a repeat distance. And if it does that, it looks very much as though we will see $100 in Tesla's near future, if that's going to be the case. I'd be very surprised seeing that sell-off on Friday. I'd be very surprised if Tesla walks away from this unscathed. So I think there's a very good possibility we could even see it break down below 100 if it does indeed follow this pattern. But that isn't always the case. There's some patterns that I have a huge amount of degree of confidence in. This one, I'm just going to say that that is what it is traditionally, and we'll see how it ultimately plays out. And we'll finish off a bit here with Netflix. Netflix, no doubt, performing a head and shoulders, very clear head and shoulders. It's broken that neckline. So here we would be expecting. I wonder if I could paste that in again. No, I can't. I've got to draw this in. So here, traditionally, head and shoulders pattern would show us that we would get a move down of equal distance. Let me just shorten that again. Excuse me, I should have done this all beforehand. So let's take that and let's copy that. What is wrong with me today? And move that down. Somewhere here, we'll get a move down. This will give us a good, you're just going to do this to me, aren't you? There we go. I'd expect a move like this, so we could see a move down towards here if that is going to be the case, and that doesn't look right at all. What is happening here? We'll just leave it like this. But there we go. They would see a further move down towards these lows over here, towards 690 below 700, if that is indeed going to unfold in that way, which actually kind of makes sense here when you look at it from a correction from this perspective. Okay, so that's Netflix. Okay, so to sum up, guys, increased volatility in the markets. It's very unsettled. Be very, very cautious. I saw some absolutely crazy moves when looking at some of the Aussie pairs, Aussie Kiwi pairs. We have a look at those. Just insane sell-offs, which is incredibly rare to see such a heavy sell-off. Aussie and Kiwi pairs. So please be extra cautious, please, guys. If you're using grid systems, just be aware this is a huge kind of danger at the moment. There's no way you could have foreseen this. Nobody could have foreseen randomly huge moves like this on certain currency cross pairs. But just now knowing, just be aware that we're possibly just at the beginning of whatever is unfolding at this point in time. All right, guys, take care, look after yourselves, risk manage, cautiously, possibly sit on your hands for a bit, and we'll speak to you soon. Thank you.